You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan. Welcome back. Today we're going to be talking about earnings. Earnings comes around 4 times a year, every single year. Earnings are like clockwork. So what we need is a dependable earnings strategy every single earnings season, and that's exactly what we have. I'm going to walk you through our earnings approach. I'm going to walk you through all of our closed trades so you can see the rhythm of it, the returns, the whole time. And then at the end, I got another free trade for you guys. We had a deal. Whenever we get over 150 likes, which we got 150 likes from our Friday video, I will always deliver a trade. So if you're on here, if you've been liking the trades, guys, give it a thumbs up. Let's get to 150 likes every day this week. And I'm going to do a whole bunch of research and continue delivering some awesome trades for you. So good morning. Got the chat open. Let's get right into it, okay? All right, guys. Here we go. Screen share. Boom. All right, I want to start here because here's a great example of insider trading. Insider trading in Bitcoin and in ETH. So here we go. There is no doubt in my mind that this was insider trading. But Bitcoin, Ethereum, those aren't securities, right? That's the whole argument. Are they securities or not? Right now, they're not securities. So if anybody wants to do some insider trading, some front running, it's perfectly legal. So let me show you what happened. I think we know who this is. My guess is this is Baron Trump, but we'll see. What incredible luck, right? Get my pen here. This is insane. Okay, so Friday, somebody did a short in Bitcoin and in Ethereum. They did it exactly, guys, 1 minute before Trump threatened tariffs against China. The last short was placed 2049, and the tweet came 2050. And here was the final trade, 2049 GMT. Sold, sold, sold. And then $10,000 later, when Bitcoin falls to 106 from 116, whoever that is, Baron, we're watching you, closes as a $190 million trade. And wow, what a stud. Way to go. Take money from everybody else. It's a bunch of bullshit, but it happens all the time. We can't think that this market is fair. This market is not fair. That's why we follow big money. We find trades that others are doing, and then we follow them because the market is filled with this kind of nonsense. Let me get into the earnings trade, guys. The earnings trade is one of the most dependable trades that we have. It's consistent, the returns are consistent, and I'm going to walk you through everything. So the rinse and repeat strategy that keeps winning earnings season after earnings season. Every 90 days, Wall Street does the same dance, and we're ready every single time. So earnings doesn't just move stocks. Earnings create predictable setups. Earnings advantage takes advantage of the same volatility that trips up most traders. We don't guess. We're not guessing on whether a stock's going to go higher or lower. We are valuing that stock into its earnings release. So here are all the results so far since launch of Earnings Advantage. And for anybody who's interested in learning more, investorplace.com/earnings 2025. Chris Water put the link, earnings 2025. So far, we've done 50 trades since its inception, 69% winners. We traded a very, very high win rate and up 32%. It's not about guessing. It's about repeating what works. And then the average hold time for these trades, 30 days. We're going to go over an exact trade. The free trade today, I'm going to present you guys with an earnings trade. So hang on. Again, 69% win rate. We are buying options, getting long premium. We are not just selling out of the money calls or out of the money puts so we can look like we have a really great win rate. Nuh-uh. We are buying options and the win rate is that good. So already 22% to 2025 before Q4 earnings even starts. While most traders are waiting for the next big play, we're quietly compounding. One earnings setup at a time. Same exact process. Literally, guys, rinse and repeat. When people learn this strategy, they say, why isn't everybody else doing this? And the answer, because you haven't learned this. Education mitigates risk. These are things that you're not going to figure out. These are things that you need to be taught. So what do? We identify the setups. We wait for an earnings catalyst. We enter days, maybe weeks before the release. And then oftentimes we're going to exit on the reaction when earnings are released. Again, not gambling. It's guidance. It's statistics. It's timing. But most importantly, it is discipline. Volatility is predictable. Reactions are repeatable. What's not predictable is speculating. Guessing on direction is very, very difficult, and it's really not a path to success for any of us. So how do we do it? We focus on the historical date, not the report itself. We use that data to value the options. This is my edge. My edge is we can research every single report that a company has released, and then we can see how much that's moved in the market. Option traders need to value that for the next time they release earnings, and that's what we do. You don't need 100 trades. You need smart trades. Trade less, hold things longer. This is about taking fewer, smarter trades built on the same reliable pattern. Okay, enough of me talking. Let's get into the trade. Okay. All right. Okay. We're going to be talking about TTD. That's the ticker right here. You notice in TTD, guys, these gaps. Look at these gaps. Gaps. This is the name that we wait for earnings because why? This name is going to jump. Some names will make really, really big moves on earnings. Other names, like an oil name, it doesn't care that much about earnings. Instead, it cares more about the value of oil. So watch. 39% is how much TTD moved on its last earnings release. The time before that, it moved 26%. The time before that, it moved 34%. The time before that, didn't move very much, 12%. But TTD is a name that really moves off its earnings. It looks like it's waiting, like nobody knows what to do until earnings comes out, and then we see a really big move. So what we want to do is we want to take this data, the data of the last 4 releases. You can use the last 8 releases. Heck, a name like Apple, you can use the last 100 releases. And then we want to value what we expect the movement to be going forward. So this is where we participate. Please participate, like, subscribe before you participate. Earnings date 11/06. TTD moves 12%, 34, 26, 39. How much do we think that TTD is going to move this earnings? If you had a guess, if you had to do an over-under, what's your one number that it's like your market? How much will TTD move 11/6? Will it move 3%? Will it move 40%? What's a fair market? What's a fair market where it's like a coin flip? Hey, 25, a little bit. It could go higher, could go lower. What's your coin flip number? And if everybody can participate, this is the time right now. What do you think? Next earnings, we know how much TTD has moved in the past. What do we think it's going to move this time? Okay, I got a bunch of answers coming. I really appreciate you guys participating. Thank you, thank you, thank you. The answers that are coming in are between 20 to 30%. So if we all guess collectively, Terry says 15, but Terry, where does 15 come from? Look how much it moves. If you guess 15, I would say I'm a buyer of 15s. Way too low. Okay? So look, let's say as the room we say 25% average, right? Now remember, 25% average is for 1 day. 1 day. 1 day. Right? But watch. If I pull up TTD, which I'm going to do right now, while I show you a stock that I really like. If I pull up TTD, we're looking in November. I'm going to pin it. And look at this. You see this number, guys? November, 39 days. So watch. There is, I want to be able to write on this. Pen. Okay. There are 39 days until expiry. 11/6. That's earnings. We said 25%, but you know what? I'm going to be super conservative. Let's say it's 20%. Okay? So if we say 20% for earnings, every single one of you who replied agrees, except Terry had 15%. But if we say 20%, remember, that's just for 1 day. What about the other 38 days? Let's say 20% for earnings plus 5% for those other 38 days. That's how I got to 25%. Now remember, my 25% includes the 38 other days, right? Well, look, if we use this number right here, which is just the price of the straddle pretty much, 11.72, get my calculator here so we get exact numbers. $11.72, and then we divide it by 5180. We get 22.6%. So right now, the market is 22.6%. That is valuing TTD for 1 freaking day. The mistake that they're making is they're going to give us the other 38 days free. We just need this sucker to move a little bit. So it's a little pricey, but that's okay. The trade, how you do this, guys, is buying the 55s and buying the 50s. We want to buy, if you could do that for a little under $9. And let me show you what we're doing here. Let me show you what we're doing here. Okay, put my pen back on. It's kind of funny. This is one earnings trade. This morning in our Earnings Academy, guys, we shared 4 trades. We shared 4 trades, not including TTD, that everybody is having conversations about in our Discord. But if we buy the 50 puts and we buy the 55 calls, you are long stock from 55 and you're short stock from 50. That's the entire trade. Then we just want really big movement in order to take off these trades for a really beautiful fat profit. Yeah, I would suggest doing a strangle, which this is. You could do a straddle, which is the same 52 halves. But I like buying the 50s for $4.50, buying the 55s for $4.50. It's a $9 trade, and then we are long TTD, we are short TTD. But the most important thing, hopefully, you'll go back and watch this video. the most important thing is collectively, we felt that 25 was the right number. 25% of movement for earnings because that's been the average of the last 4 earnings moves. Well, the market's pricing in 22% of movement for 39 days to go until expiration. Somebody's got to remind those TTD market makers that it's earnings season. So therefore, this volatility should be quite a bit higher. I think it should be trading at 27%, 28%, 25% for those earnings, and then some extra percent for those days that are not calculated for. So hopefully you could see this is a real trade, guys, but there's a learning curve. Anything worth learning, any strategy that's any good, there's a learning curve. It's not going to be easy. That's why when we talk about this earnings, when people really learn it and grab onto it, that's why they say, JR, why doesn't everybody do this? Well, I didn't know how to do this before I was a market maker. People are afraid of options. People feel like they're on their own. So that's what we do in our community. We keep it nice and simple. Why not work with the weeklies at the November 7th, the day after announcement? Aaron, because November 6th is just the estimated date for the earnings. It's not 100%. And we want that extra time that the market makers are not valuing. Remember, they're only valuing earnings. They're not valuing all that extra time. Aaron, really good question. What I always do now, guys, is I break off for our all access group. I want to go over those earnings trades that we shared with them today. Hopefully you guys like this. Give it a thumbs up. We need over 150 likes and we'll get a brand new trade tomorrow. Thanks for watching, guys. All access. You guys don't go anywhere. We'll be right back.